Welcome, wel- welcome to Turnaround Tuesday. That's the theme of the day, isn't it? Every day in the stock market has a theme. There's a theme for investors to be enjoyed daily. New one served fresh. My name is Mitch Goldberg. Welcome to a brand new live episode of Be the Boss of Your Money. Why? Because I want you to be the boss of your money, not your money to be the boss of you. You know, it's very easy for your money to take control of you and to boss you around. Let's prevent that. Today, the focus is on investing. And ever since we've been in this pandemic, the focus has been markets. But ultimately, your personal finance habits are really what determines your net worth over time, not just making a good decision today for the stock market. Because you know what? We're not even here to talk about the daily decisions. We're here to talk about the daily habits. In any event, we are talking about investing. We want to do it right. We all want to do as well as we could. So let's get into it. We're going to roll the introduction, and then we're going to talk about Turnaround Tuesday. Well, hello, everyone. My name is Mitch Goldberg. I am a financial advisor with the wealth management firm Client First Strategy because I put my clients first. Hey, you know what? If anyone ever asks you what's in a name, you tell them, ask Client First Strategy that. They'll tell you, Client First. Hey, I'm Mitch. I would love it if you would ask me your questions in the comments. I would love to field your questions. That to me is the best part of the day. Words of wisdom and words of encouragement are always appreciated. I love to get into some banter, and that's the first thing. And I'm going to work in the core of today, the topic, the theme of the day, which is Turnaround Tuesday. So we're going to get into that. Why do I call that today Turnaround Tuesday? Yesterday, the major averages, in particular the NASDAQ 100, went up over 2% early in the day and reversed to close down 1%. That's only happened twice. The last time it happened, I believe, was around 2008 or so, according to Sentiment Trader. Let me see. Last time that happened was March 7th of 2000. Okay. So I've been comparing what's happening to a lot of these large cap, and not just large cap, to basically tech and communication stocks in general, to 1999, 2000. Are we as bubblicious as we were back then? The short answer is no, not as bubblicious. Back then, can't believe it was over 20 years ago already. But you know, if you look at today, let's use like Tesla as an example, because that stock about 2 weeks ago, a week and a half ago, hit $1,000 a share, and then it rocketed to almost $1,800 a share in just about 3 weeks. What did they do in 3 weeks that was so great? Nothing. It was just momentum. So, but at least they do have cars. At least they do have machinery. Patents. They have a business. They do have other things. They've got I think this amazing CEO. You can't really. Yes, could it be overvalued? People have been saying Tesla's overvalued for years, and everyone's been wrong. And short sellers have gotten their heads cut off from saying it's overvalued. But the issue that I have with a lot of these stocks is you could get the fundamentals right. You could actually be a good fortune teller and say the fundamentals came out great. The earnings came out. They sold X amount of cars. Everything was great. But you could still be wrong on the price of the stock, because sometimes the price of a stock goes up so high that it's almost impossible for the fundamentals to grow into the stock price, at least over a short to intermediate term. So that's the main thing with year 2000. Companies were so overvalued and such high valuations based on commonly used valuation metrics that there was no way these companies could grow into their valuations. It did eventually happen with a couple of companies like Microsoft and Amazon, but those are the exception, not the rule. Amazon did not have the clout and respect that it has today. Amazon was like, I mean, it was kind of like a joke back in 2000. I know it's hard to believe that. Now, anyone who said that, you too bad you didn't make money on it. But here's the point. Stocks other than the year 2000 have gone parabolic in terms of tech and communications. Not everything, but to the point where you have to start to question, is it justified? And I think that's where you get into the consideration of, is something overvalued? If you don't think, a growth company is always going to be overvalued because you expect that the company will grow into its exalted valuation. But if the valuation goes up so much, you have to wonder if the company has a shot to grow into it. That's what I mean, by the way, that you could be right on the fundamentals, earnings, revenue projections of a company and still get it wrong on the price of the stock. So that is the deal today. So let's talk about Turnaround Tuesday, because yesterday was a pretty miserable day. On its own, yesterday was not a miserable day, but compared to how great the day started and the rally just fizzled out, and tech stocks, which galloped up, finished down, it was a really tough day, it turned out, yesterday because of that. So let's compare it to today, because today was almost the complete opposite. Let me just enlarge the screen a little bit so you'll be able to see it. Okay, boom, we are sharing screen. I hope you'll stick around with me for a little while. This is going to be good stuff, and I hope you'll ask me some questions in the comments, okay? Dow is up 556 points. Really big day. S&P up 1.34%, up 42 points. NASDAQ up almost 100 points, up almost 1%. And the Russell 2000 up almost 2%. And the VIX was back down below 30. Overall, you really can't argue with the day. You really can't poke holes in this day. I mean, I don't think it's possible. And I'm going to give you the reason why this day was such a good day. And it was kind of day that we needed after yesterday's day. We needed some reason to be bullish. I think today gives it to you. All right. But if you look at the Dow Stocks, Caterpillar caught an upgrade. The stock was up $6 a share, almost 5%. Travelers, Financial up. Energy, look, Chevron up. ExxonMobil up. These are over 3%. Home Depot, McDonald's, United Healthcare, Dow, Goldman Sachs, Boeing. It was a very eclectic group of stocks. Disney, as a matter of fact, all the stocks in the Dow were up today. Granted, a few of them were barely up. JP Morgan, that's been getting a lot of talk today because they had such a blowout earnings report. I want you to consider three things. So let's go to the next screen. Okay, I want to show you JP Morgan, Citigroup, Wells Fargo. Okay. JP Morgan and Citigroup had really good earnings, especially JP Morgan. They had a record quarter for earnings, but it didn't reflect what you think. JP Morgan made it on trade. They made their quarter on trading revenue, which is just basically they were amazing at capitalizing on market volatility over the last quarter. That's what that was for. It wasn't because they had this record surge in loans and everything is great with the consumer. They had to set aside some $8 billion some odd dollars to cover consumer loans. I read that this morning, but that was like, I don't know, it was like 8 hours ago. Citigroup was also had a good quarter on trading, was down $2. And Wells Fargo, they just didn't have a good quarter, down almost 5%, down $1.16. So I have another screen over here. It's easier for me to see it. So the whole point of that was to say JP Morgan in the Dow is one of the weaker stocks, even though that's a stock that was basically in the news all day. But it helped Goldman Sachs trade higher because no one's a bigger trading outfit than Goldman. But it was 3M was up, Boeing was up. I mean, you have like a lot of really big stocks that were up, 1%, 2%, and 3% plus. Let's take a quick look. take a gander. We're going to take a gander. This is why the market was able to go up. It wasn't so much that the FANG stocks went up so much. Okay, 4 out of 6 were up. The ones that were down were not down that much. But Apple was up 1.65%, so I'm happy for them. Amazon, I'm wondering if it's going to hold that. If it's going to hold that $3,000 level on Amazon. But the reason the market was able to rally is this. It's because these large 6 tech stocks did not go down. Let me repeat that. They didn't go down. The proof is right here. This is how how they closed on the day today. So the thinking has been that money would come out of tech and go into industrials, financials, energy, and other sectors, materials. And lately, it hasn't really happened yet. Yesterday the techs came down. But are the other companies big enough to compensate for the drop in tech and communications? When I say communications, I'm talking specifically Google, Alphabet, and Facebook. But if these stocks had given up the ghost today and were down substantially, we would not have had such a good day, because these stocks make up almost 30% of the S&P 500. The S&P 500 is an index of generally recognizable large cap companies that trade in the United States. You can't invest, by the way, directly into an index. You could invest in a security that tracks or mimics an index. So the FANG plus M stocks held up pretty good. So people thought there would be a giant rotation. We've been talking about this giant rotation from bonds into stocks for the last 10 years or so. It hasn't happened. But now we're thinking, the talk on the street is that money will come out of these these mega cap tech stocks that have surged, and that money will find its way into industrials and financials and other sectors that are lagging. Hasn't happened yet. So when you have these stocks hold up, in fact, up more than down, and surging, other sectors surging, that puts in a really solid day. And I have to say, as negative as it was yesterday, technically, today was pretty positive. Technically, it's really hard to pick a direction. And listen, we're talking about short-term stuff. If you're a long-term investor and you're investing in your 401k plan, you're going to put money in the market, and you say, what, I don't need that money 10, 15 years. Then a lot of the stuff is not really going to count as much. I will say, the NASDAQ, when the bubble popped in the year 2000, when we had the tech wreck, it took 15 years. That's a long time to wait for the NASDAQ to come back. And many stocks have either disappeared or have never even come close to coming back. That's the problem with valuation. The whole point of the NASDAQ back in 2000 was we're going to have this giant thing called the internet. It came true. In fact, the internet became more true than anyone expected. I mean, whatever people predicted as how big the internet would be, they were all wrong. It was way bigger. I mean, it had to go beyond your wildest imagination. And yet people still got the stocks wrong. Plus, a lot of companies just couldn't survive and wait it out. They ran out of money. So let's just take a quick look. We looked at the FANG stocks. We'll take a look at the sectors. Okay, so energy was the leader of the day. It's pretty bullish. Materials up, industrials up. I'll find one thing to knock today. Financials were the worst performing sector. Yes, they were up today, but still the worst performing sector. They are doing charge-offs because of poorly performing loans or loan defaults, consumers having trouble. So I am a little worried about the financials, but listen, every single day there's going to be something to worry about. You're watching Be the Boss of Your Money, because I want you to be the boss of your money, not your money to be the boss of you. We're talking about Turnaround Tuesday in the market. If you have any questions, now would be the time to ask, because I want to skedaddle. I want to either get on my bike or my rollerblades this evening and get some fun exercise in. Okay. Oh, by the way, big news. I wish I'd shown a picture of this today. It's official. I am now a board member of the FPA of Long Island, of the Financial Planning Association of Long Island. So yay, kudos to me. We've got a lot to do, and I know almost everybody on the board already, and I'm looking forward to getting to know some of the people who I don't know. And it's going to be a lot of fun. So we've got a lot cooking with that, and I'm kind of happy also because I'm hoping to meet a lot of financial advisors, and maybe it'll help me grow my firm one of these days, right? All right. So that's the big news today. Turnaround Tuesday in the market. Technically, a lot of the damage that was done yesterday has been undone today. I think today every investor could feel good about. All right. I'll speak with you soon. I'll speak with you tomorrow. How about that? That's sooner than soon. Tomorrow. Okay. Got a heart out there. I knew that was you, Judy, with the heart. I love that. All right. Same to you here. Heart. Okay. Talk to you soon, guys. Bye.